Good morning, everyone. In today's video, we're going to give you an update on the current condition of Bitcoin. An important update that we're bringing, in fact, will simply be to go and do more every week. Video about 1 or 2 per week, where we will, unlike before, analyze a single asset. For example, today we'll focus on Bitcoin. Still this week, we'll also do a focus on oil. Next week, we'll analyze 2 other individual assets, so we can bring you more value on more assets each week in a more specific way. And keeping, let's say, the video short, okay? So, just before we start, I obviously invite you to read this disclaimer here because I remind you that we are not financial advisors. So pause the video, read it, and then we can get started. So first of all, yesterday I was talking on April 14th. When the price of Bitcoin was at 74,600, I saw a lot of people being bullish, generally at the worst possible moment. Okay, and now I'll take a moment to explain in detail exactly why I believe this is not a very positive moment. So, speaking in terms of volume, this is one of the many different technical indicators and tools we use within our community. If you want to have them for yourself, once you decide to subscribe to our platform, you get full access to all the indicators. Anyway, this is a volume indicator that basically shows when significant levels of volumetric support or key resistance points are reached, or when they are eventually broken. I'll give you a simple example. If this volumetric point happens to be broken to the upside, then it is extremely likely that we would see a bullish expansion here. Which actually I don't think will happen because look here, there's a divergence. While the price is going up here, the volume is going down. So what's happening right now? There was a dump from this area, but what else happened? The price here started to move sideways. When the price moves sideways for a period, but the trading volume builds up significantly once again, usually what follows, not 100% of the time, but in the vast majority of cases, is a subsequent breakout. A subsequent volume dump occurs, continuing until it eventually creates a lower low right here compared to the previous closing price. So when it forms a clear lower low below the $63,000 level here, while over here on the indicator it forms a higher low, it creates a sort of bullish divergence. And when a divergence like this forms, there is potentially much more room for a more significant and sustained upward move in the price. What I mean by that is, if this actually goes on to establish a significantly lower low point, because it is entirely possible for it to happen, just like we saw right here, it can certainly happen that the market dump is so incredibly strong and aggressive that it simply doesn't form a higher low at all. So here it creates a double bottom, and as a result, this double bottom is less strong in terms of a macro reversal compared to a classic divergence. As a result, from this low to this low, there was no divergence. Therefore, I am still waiting for a higher low in terms of volume, but considering a lower low on the chart. And when a bullish divergence forms here, then it becomes more likely to see a sort of, let's say, signal of relative accumulation, okay? For a medium-term time horizon, from there to the following several months. But for now, until I see it, there are no signs. Furthermore, the RSI chart. So we can see that by drawing the RSI from this point, we can see that each time the RSI in fact has recharged. Same thing, very similar to the volume I showed you below. When the price moves sideways and the volume recharges without creating any kind of divergence. Bullish, it's usually a bearish sign that brings the price then to go back and retrace, okay? It's almost as if it's catching its breath to then deliver another blow, and in this case, theoretically, it should be a bearish blow. There is another extremely important point that we need to consider. When a specific sort of bullish breakout of this established trend line begins to form right here, many retail traders and market participants, if they are only focusing their full attention on the price action itself, will likely start to think that a major shift is occurring. Okay, perfect, now the price will start to rise significantly and will go after the liquidity of people who have basically placed their stop losses up here. In a moment, we will look at this type of chart, and I will show you my personal point of view. Actually, in my opinion, and considering the RSI and the volume, as well as other indicators that I share in the premium group, by the way, if you want to have access to these indicators, to many more analyses on many more assets like stocks, commodities, cryptocurrencies, and so on, including individual assets, you can find the link in the description to join the premium group. It's not a group where we show trading operations. We are not financial advisors, so we can't even tell you what you should do. However, we do present general analyses within the market that can be very useful as simple insights. So, at the moment when there was a bullish breakout here, many people started, or definitely started, to think, and I saw this especially abroad, that everyone switched to bullish, saying, okay, this trend has been broken to the upside. As a result, everyone is going long, so I'll go into. That's what a lot of different influencers out there thought. My opinion is that this was a false breakout, a manipulation. In fact, we've seen that in terms of volume, nothing has actually been broken yet, neither in terms of RSI nor in terms of volume. But let's take a look. Furthermore, if we go down to a lower time frame, what can we observe? We can observe that here the price made a higher high, while here it's making a lower high. So essentially, this is indicating to me that this could probably be a divergence, a false bullish breakout, only to see the price come back in. And if by chance this happens, if the price falls back below this range, here would be the trigger to potentially have a higher probability of seeing these liquidity zones. For example, like this one, this low here, then also this one, and then this one as well, taken to the downside. This is obviously a probability, not a guarantee. Furthermore, looking at the 6-hour time frame, this time on the Bitcoin futures chart, we can see the following. In terms of volume, this is an indicator called on-balance volume. Since 2021, we have just touched a trend line, or at least there is a trend line, that every time we touch it, it pushes us back down in terms of volume. It pushed us back here as well in 2024, and here it got very close in 2024 again, but towards the end. Afterwards, it approached the top, touching it several times, here making a false breakout and then collapsing. What happened? Now we've retested it, and for the umpteenth time, we're feeling its effect. Okay, so as a result, if we connect this historical volume trend line that starts from 2021, these volumes here are bearish on lower time frames, and again, these bearish volumes are present on the medium time frames as well. Furthermore, when we carefully examine the RSI, all of these technical indicators combined lead me to the firm conclusion that it is significantly more likely that this recent movement was actually just a false bullish breakout for Bitcoin. And as a result, it's more likely that we'll see some sort of pullback, probably heading back towards the lows again, at least below 64. This is my opinion, though I could be wrong. Furthermore, looking at the liquidation heat map on the time frame, this is the 3-month time frame, but this one is from Bybit. Up here, it shows little liquidity. The reality is that if looking at the liquidation heat map of Binance, Bybit, Bitget, etc., this is not the normal scenario, because here it shows a predominance of volumes to be liquidated to the downside. But normally this is the overall view. So it's, in effect, we have liquidity to be taken both above and below. What's the point? The point is this: as long as this 6-hour volume remains low on the futures, and as long as the total trading volume over this 2-day period on our proprietary SM Capital Market Indicator stays consistently below this specific area, it is highly likely that we will see price action necessarily remaining within these zones, up here towards the $80,000 level. It's more complicated for us to reach them. Is it possible for us to reach them? Yes, it's possible, but it's more complicated. As a result, I continue to think that sooner or later both zones usually get taken, both to the upside and the downside. Why? Because market makers create a sort of sideways channel in order to then go and target those zones, both to the upside and the downside. Right now, it's more likely that we'll go and take out those to the downside, as long as this volume stays below this trend line. Same thing here as well in terms of volume on the OBV. The moment we break upwards here, then it's likely that we'll break out. But as long as we stay bearish here, and there are really many more indications that it's more likely we'll remain bearish, the most probable scenario, in fact, is the liquidity grab of the lower zones. So it's likely that during this year, we'll go to reach areas around 74. Sorry, I made a mistake here. I need to update it. Let's always check BitGet. What can we see? We can see here below $64,000, a lot of liquidity to be taken. Also down here towards 57 to 54, there's a lot of liquidity to be taken. And obviously also above $80,000, there's just as much liquidity to be taken. I repeat, considering the OBV resistance from 2021 until now, considering the volumetric resistance from our indicator, also taking into account the RSI and even the short-term bearish divergence, which suggests that this breakout is a false breakout, everything leads me to think that the most likely scenario is, first of all, a liquidity grab below 64 and maybe even below 58. And then later on this year, a new move up towards $80,000. I think a direct rise to 80 is less likely right now. Maybe I'm wrong. I'll only have confirmation if we break above this level. For the OBV, and it's the same thing for this volumetric chart on the 2-day time frame. Only when this is broken to the upside will there be confirmation that we could go to $80,000, but not before. Consequently, as long as these levels aren't broken, the most likely scenario is a downward move. I hope you enjoyed this video. If you want to stay updated more quickly on my thoughts, I invite you to subscribe to the free Telegram channel. Here I show several comments, but if you want many more comments, much more analysis on many individual assets, on many more indices, commodities, that is raw materials or cryptocurrencies, there is the premium group. Also, in the premium group, you can have access to all our SM indicators. I hope you enjoyed this video, and I'll see you in the next one. Take care, guys.